Well, why don't we go ahead and get started? All right, it's 12 o'clock straight up. This is a noon Zoom. Let's start it right at noon. Noon, why not, right? Hello, everyone. Welcome. I'm Ken Knickerbocker. I'm publisher of Vista, Monco, Delco, and Bucksco Today. I'm glad you could join us for our noon Zoom about protecting your small business from asset loss and fraud. Recent events in the news, and we all follow the news, have been focused on how we can all remain proactive to safeguard our businesses and our financial assets against theft, fraud, and market volatility. I have with me today Phil Corradino and Ray Abbott of WSFS Bank to talk to us. And before I turn it over to them, let me just talk about housekeeping for just a moment. We're going to be, Phil and Ray will be speaking with us for about 45 minutes. About 35 minutes, 45 minutes after the hour, that we'll open it up for questions and answers. And those questions and answers can be submitted via the chat function or the Q&A function at the bottom of the menu bar. And if you have a question that you want to address right away, push the raise your hand button and we'll bring you right into the conversation. So Phil, Ray, take it away.
Thanks, Ken. Thank you for that intro. Just to repeat, my name is Phil Corradino. I'm currently the New Jersey Regional Manager for WSFS Bank. I oversee 13 offices throughout the Southern New Jersey market. My responsibilities include deposit and loan growth for the branches on the consumer side and also on the small business side, maintaining branch operational integrity, and working with all of our customers to ensure their accounts are safe, secure, and in the best possible solutions to help them grow and succeed. With me today is Ray Abbott. He's our division manager for WSFS's cash management department, and I'll let him go over some of his responsibilities as well. Go ahead, Ray.
Good morning or good afternoon, everybody. So welcome to the NoonZOOM. Yeah, I run the cash management group here at WSFS. All things deposits and the non-interest fee income that comes with it at the bank. But some of the services that come with our group we'll cover today help protect businesses against fraud and check fraud and online banking fraud and a lot of the things we're going to cover today. Another thing that we plan to cover is CDARS and ICS, which will enhance FDIC coverage. But I've been in banking for 37 years, most of my career in the treasury management, cash management space. I've been at WSFS since 2008. Phil?
Great. So we're going to start today just briefly talking about the current economic environment and what that means to everybody here as a business owner. So we're experiencing a rate climate that we haven't seen in close to 20 years. While the Fed just recently paused interest rate increases, we've seen the Fed funds rate go from 0.25% in March of 2022 to 5.25% as recently as May. This led to a dramatic increase in both deposit and loan rates from where we were as recent as 15 months ago. This, along with the recent health issues with some of the less diversified banks, has brought back a lot of conversations around not just interest earnings and investable liquidity, but also protection and safety of those same assets. The FDIC on slide 4 provides each business customer protected deposits up to $250,000 per tax ID number. As you can see on the second half of the bullets on this slide, it encompasses all products offered by most banks, not including cash management offerings. So these are the basic and the depository products that you get at any financial institution that's FDIC insured. So later in our presentation, what we'll do is we'll touch a little bit on the coverage allotments and the opportunities on the personal side. But for now, we'll just stay with business accounts. We know that there at $250,000 for small businesses, it's a very low ceiling, and that threshold very easily passed. And that's kind of why Ray's part of this group and why we're going to turn things over to him to discuss opportunities for businesses to protect their assets over and above the $250,000 threshold.
So this slide is mine, the CDARS and ICS FDIC coverage. As everyone knows, the Silicon Valley brought a lot of awareness into the realm of FDIC coverage. We had customers asking about FDIC insurance that we hadn't seen since 2008, the financial crisis of that year. We've had some products in our portfolio the banking industry has that provides extra FDIC coverage up to $150 million in coverage due to a network of banks, well over 3,000 banks in this network, and community banks, larger banks, smaller banks. A lot of different banks are in this network. And the way it works is it's a network where we share our customers to provide FDIC coverage throughout the entire network. And the customers, big difference here is rather than having customers go to 4 or 5 different banks to get FDIC coverage for their assets, they come to one bank and we provide the extra FDIC coverage through this network of banks. And we set the rates, each bank sets the rates, each bank sets the interest rates, but the safety is coming from the FDIC through the entire network of banks. So for an example, if Phil and I were at 2 different banks, Bank A and Bank B, we would be able to provide $500,000 of FDIC coverage to our customers just by sharing within the network. I brought an example here of CDARS, and this is a CD product. I want to point something out here because everyone will probably look to the APY first. It says 0.25%. And the effective date of this example is August of 2020. So, boy, what has happened since then? That used to be a great rate, 0.25% for a CD. This product is all about safety. Generally, you should be able to get higher rates if you get a traditional bank CD. But in this network, today you should see rates, depending on the term, in the high 3s, low 4s for this type of a product. And they're set by term. This particular example is a 26-week public fund. So a lot of municipalities might use this, but this is available to any customer with an EIN number. So that could be a business, a person, a public entity. This is a sample of a city, for example, that had $5 million. Because of this network, we were able to give full FDIC coverage. And this is just one page of the statement that I was showing for an example. You'll see here 2 different banks which have coverage to support the full amount. Again, $5.2 million FDIC coverage came with 100% of the balance here. And next slide.
Great. So FDIC coverage is a lot different on the personal side than on the business side. If you're banking with your branch, the FDIC will cover $250,000 for your tax ID number, and that is all encompassing. It doesn't matter how many accounts you have, whether you have an accounts payable account, an operating account, a payroll account. That tax ID number is covered to $250,000, and that's it. So what Ray was talking about, what we've done as financial institutions is partner together to have the capacity to cover businesses without that business having to open a multitude of accounts at different financial institutions. On the personal side, there's a little more leeway as far as FDIC coverage. I'm just going to touch on this because everybody on this call as business owners has personal assets as well. How the FDIC covers individual and personal accounts is they code it by product. So it's actually by a product category. Single, joint accounts, and either payable on death, it can be called in trust for revocable trust accounts. They're all different types of product categories that can be covered. So quick example for myself and my wife. We could have $1.5 million in FDIC coverage in the same institution just by utilizing the different account types. So I could have a single account just in my name for $250,000 worth of coverage. My wife can have an account in her name for an additional $250,000. We then can be covered an additional $500,000 if we have an account jointly. So it'd be myself or my wife as joint owners. So that'd be $500,000 in joint, $500,000 with the two single accounts. And then we can have an additional $500,000, myself in trust for my wife, and then my wife in trust for me. So in one institution, two people, that's $1.5 million worth of coverage. The FDIC actually has a great electronic calculator that will allow you to check what can be covered. You can plug and play through this. It's at the very bottom of this slide. It's called the ED calculator, the electronic deposit insurance estimator. So you can go in there, you can kind of play around. If you have children, you can have additional coverage by having trust accounts in your children's name as well. And both Ray and I'll be happy to answer any FDIC coverage questions that you may have at the end of this call. The last thing that we'd like to talk about before we switch to fraud and risk is to respond to the recent bank struggles and how we can feel comfortable as owners in our financial institution. So the issues that occurred this past March were very isolated, but they're still very scary to any consumer or business having any deposits in any institution. So every customer wants to feel safe and secure in their bank, and there are always ways to allow you to do so. When evaluating banks, it's very important to know how well diversified your bank is. Make sure they're well capitalized, make sure they're not overexposed in one specific industry segment. Look at their credit history, and you can also look at their asset quality as well. It's also important to know your banker, not just the name on the door. Having a strong relationship with your banker provides you opportunities to discuss not just immediate needs, but also long-term plans, outlooks, and opportunities for your businesses to grow. Establish a relationship with either your RM, your relationship manager, or your branch management team, and let them know about your business, let them learn about your business, and see how they can help you succeed in their market. Most branch managers, most RMs are experts in their field and in their area. So have conversations with them. They really are there to help you. And always have availability to liquidity, the third bullet point. I know sometimes that's easier said than done, but that's another area where having a strong relationship with your banker can help you, either on your excess liquidity that you have available or on the lending side when discussing possible line of credit for liquid needs. Ray, go ahead.
Yeah, so I'll just add on to know your banker. Bankers can help in a lot of different things. Forecasting, planning, preparing. A lot of small businesses, they don't know their cash flow. They don't know how to predict, money coming in, money going out. Sometimes that's very difficult. But we as bankers, we live and breathe this stuff all the time. We're, at our bank at WSFS, we live, work, and play and right here. And knowing us and having access to your banker is just critical. So here are the things we recommend for all businesses, big and small. Forecast your cash flow. So you want to know, what's coming in, what's going out. It's very, very important to know your cash positions. And if you're expecting a negative cash flow situation, some might be, inflation is on the rise. Your expenses are going up. Sometimes you have to monitor, just like you would in your home, in your personal finances. You just have to understand what's coming in, what's going out. They call it a burn rate. The burn rate is the rate that you spend income in excess of your expenses. So if you're in a situation where cash flow isn't coming in, that's a negative cash flow. That's when having a line of credit is very handy to have. And so when's the best time to get a line of credit, Phil?
When you don't need it.
When you don't need it. So now's a good time to look at a line of credit if you don't have one. And try and get what's appropriate for your business. So you don't need to have a low credit line. You want to be prepared for, times when times get tough. So it's there when you need it. So plan ahead, work to get a line of credit with your bank. That'll really help you when times get tough. And even when times are good, you have to buy your inventory and support your accounts receivable of a growing business. So you have to wait to get paid once you invoice. So those are different things you can do to improve your cash flow. Next slide. Okay, so here's my favorite slide in the cash management realm of things. It's related to payments. In the payment space, you have money coming in and money going out. So how can you get your money quicker? So especially during pandemic, invoice electronically. Don't rely on the post office to get your invoices out. Most accounting systems will allow you to do that. Even QuickBooks is a very good small business accounting package. Invoice electronically. But you have different types of accounting packages that are out there: NetSuite, Oracle, big and small. But a lot are tending to use QuickBooks in the small business space. But again, invoice electronically. This is not new technology. It might have been 10, 15, 20 years ago, but invoicing electronically is the way to go. We saw a big spike in that during when COVID came upon us. Remote deposit capture. Remote deposit capture, what that is it's a scanning device. It's about the size of a toaster, and you scan your checks electronically into the device. And by doing so, and because of Check 21, those checks can be deposited without going to the branch, which was in effect prior to Check 20, the introduction of Check 21. That's been over 20 years now. But remote deposit capture started to become a bigger thing. You can scan hundreds of checks per minute with these little devices, and the money becomes available in your account the very next day. So then came the advancement of technology to mobile deposits. Smaller limits, but now you use your phone, so you can scan checks on your phones, and those are one at a time. So the benefit of remote deposit capture over mobile, as you can imagine, if you have 100 checks and you're trying to scan, one at a time, that might take you a lot of time. But remote deposit capture, there you can scan a lot all at once. Lockbox, that's a way to have a post office box rather than using your address where people send checks to the company. You can send it to the bank, and the way the lockbox works is the bank will give you an address, and the bank will basically replace the bookkeeper in that we will open up the mail, scan it electronically, and deposit those checks electronically every single day. So those are checks. Let's try to get away from checks. Merchant services, that's Visa. If you don't have that, talk to your banker about merchant services. That's Visa, Visa and MasterCard and so on. Those, if you're not taking cards today, you probably should be. There are some fees for those types of things that basically come off the backs of Visa. But, with merchant services, that's taking checks electronically using cards. And that's heavy growth, especially since COVID. ACH services, banks will have that as well. That's where you can move money electronically. All you need is an ABA number and an account number at the other bank. Things with it, the benefit of ACH is that it works very similar to a check, but it's electronic, and you can do that every single day by uploading to your bank. We started seeing that in the banking industry in the 70s, really, with direct deposit. That's really one of the earlier types of services for ACH. But now businesses are doing it electronically just between themselves. There's a lot of B2B services taking place right now with ACH. Wire transfers, you'll see wires, those are electronic payments. Those are final payments. When a wire goes out, it's like handing cash to the other party. And the smart safe technology, probably not so much for smaller businesses just yet. I put that in this slide, but you'll see that with a lot of retail convenience stores, and with fast food restaurants, movie theaters, where there's a lot of cash transactions. And basically it's putting the cash in the safe until the armored car carrier comes and picks it up, and the money becomes available, spendable, very next day. Almost like remote deposit capture, but with cash. Cash disbursements. All right, so that's money coming in. It's good. You want money coming in, money going out. Same thing here. Pay electronically using your accounting systems, QuickBooks, NetSuite, Oracle, all these different types of accounting systems, Dynamics. They all have modules that will allow you to pay electronically. And again, since pandemic, nobody wanted to come in to print the checks. Can you believe it? So use bill pay wherever you can. Just try and get the checks out of the system. And if you don't have ACH, use credit cards. Get cashback rewards at your bank. If you have large transfers, sometimes you might need a wire transfer. And again, those are for immediate payments. And you have to be careful with wires, but I always recommend make sure you pick up the phone and call the receiver just to make sure that it is indeed the person you're trying to send money to.
Thanks, Ray. So now we're going to switch gears. We'll discuss safety and security of your assets. Between Ray and myself, Ray mentioned how long he was working when he gave his bio. I've been in this role for almost 15 years, and I've been in banking for over 20. So between the two of us, we have over 50 combined years in the banking industry. And I can tell you, and Ray can confirm, I have never in my life seen the amount of fraud and scams as we have in the past 3 years, and it's only getting worse.
Mm-hmm.
I gave an example earlier to Ken that it's like every bad person out there saw the movie Catch Me If You Can and decided to try it on their own. And anybody here who hasn't seen that movie, I definitely recommend it. It's worth the watch. But just like we have policies and procedures in the bank to mitigate, detect, and to try to prevent fraud, we really need, as bankers, the partnership with all of our customers to combat this daily, nonstop. And the only word I can think of is terror to our industry. Some things you can do to prevent fraud in your businesses is make sure you have a separation of duties in your office. Unless it's you as the business owner managing the finances and your daily finances, it's best if you have two sets of eyes on everything. And we'll talk more about that in a minute. Have separate accounts for different parts of your business. Constantly engage your team on fraud prevention practices, and contact your insurance company or your broker regarding cyber insurance. This is another area where knowing your banker and having a quick connect can also prevent loss. Speed is your weapon when something bad happens and you have to respond quickly. Sometimes you can't attack or stop fraud at its point of origin, but a quick call to your contact at the branch or your relationship manager can still prevent it from hitting your account and you taking a loss as an owner. Always consider your bank a partner in this. Don't ever be afraid to call your banker and be honest about what's going on. This is a battle and we are all in this together.
So this slide is mine. As Phil mentioned, just check fraud is alive and well. There was just an article in the paper in the Philadelphia Inquirer just on Sunday about check fraud. Same type of things we're covering here. So every bank, every business, you're starting to see this a lot. There really isn't any silver bullet in stopping check fraud, but the closest I've seen is positive pay. And positive pay is nice, but payee positive pay is even better. And the way that works is when a business cuts its checks, and before they drop them in the mail for the to be mailed out, you send a check register to the bank, and we know in advance, everything about those checks: the payee, the number, the account number, the ABA number, the date, the payee. Payee is a feature. It's an optional feature, but it's a pretty key feature right now, especially some of the things we're starting to see where checks are being washed, and where you wash the payee and you just you take out some solution and lift out the ink and then put in a different name. And that's kind of scary that we're starting to see those types of things. As Phil mentioned before, there's really no silver weapon, or there's no silver bullet here, and speed is our weapon. So that's where look at your accounts every day. If you're not looking at your accounts every day, you're not going to be able to see fraudulent activity. So that's where positive pay, I think, is pretty critical. The banks will alert you if you're set up for the positive pay product line. The banks will alert you to know, hey, there's something that doesn't match here. The pay doesn't match, or the amount doesn't match, or whatever it may be. But those are the two big ones: the amounts and the payees. Are they getting the checks? It's a mystery to a lot of people. But you think about the path of a check, you drop them in the mail. Like some businesses might not have somebody monitoring the front desk. When the postal worker comes, some will hand the checks right to the U.S. Post Office, and you just don't know where the check goes after you drop it. So that's where I think it's critical, just to do those account reconciliations every single day. And if you don't, then you expose yourself.
Right. If I could, before you talk about ACH and wire, I have a very quick story, and this is something we're seeing right now in the branches. This has been the last 2 weeks. Hours of my life I've been spent on this fraud, and it is all regarding check fraud. What we're seeing now is an influx of stolen checks in the mail. And these checks are made payable to businesses. It's not that they're made payable to individuals. And what these fraudsters, these scammers, I guess what we call them, what they're doing is they are seeing the name that the check is made payable to. And we'll just use an example. We'll use Ray's Hardware. So they'll pick up a check made payable to Ray's Hardware for $10,000, $11,000, $12,000. They will take the check with them. They will go and register a business with the state as Ray's Hardware and Improvements LLC. Very, very similar to the name of the real name on the check. They'll receive state documents that business is now registered with the tax ID number. Go into the branches and open up a business account. Ray's Hardware and Improvements LLC. Deposit $100, $200, some nominal fee. Wait about a week, then deposit that check made payable to your business into their fraudulently open but legitimate business account. Withdraw those funds the second they clear. And then 2-3 weeks come by, the real Ray's Hardware will call the maker of that check saying, hey, we haven't received your check yet. Person will say, no, it's been cashed. It's been credited. And then it comes out and like that's stolen. We're doing a lot of things on the back end to prevent these accounts from being open. We can do a name check. That's what we're doing now to make sure there's not a long-term established business with a very similar name in the same area, whether it's New Jersey, whether it's a Philadelphia suburb or the city itself. And then we're bumping up to security before we actually open those accounts. But it's out there. And what these fraudsters will do is they will dial for dollars until they find a bank or an institution. If their guard's not up and the hackles on the back of their neck aren't standing up because they're anticipating it being fraud, and they'll get those accounts open. So check fraud, when you say is alive and well, it's in so many different forms. It's scary out there, and it's daily. So thank you for letting me interrupt. Sorry about that. I just wanted to put that example out there.
No, that's all the banks are being faced with this too. If there wasn't so much theft in the mail, we wouldn't see the things that we're seeing. But payee positive pay, that will prevent it because it'll match up the payee with the account holder. So those are the types of things you want to see. And I'll move on to the best way to prevent check fraud. Get away from checks. So the automated clearinghouse, like I said, it's been around for years and years and years. It used to just be direct deposit of payroll. But over time, and back in the 90s, they'd say, hey, ACH is going to replace checks. The volume of ACH is going to exceed checks by 1997. Okay. 1997 came and went. They kept saying ACH is going to exceed check volume. It took a pandemic to really see it, frankly. Businesses, we've seen a lot of growth in ACH. COVID really catapulted ACH as a means, and wire transfer too, but really ACH to jump over the amount of checks being issued and cleared in the banking system. So the trends are there. ACH is one of the fastest growing payment methods that are out there, and it should replace. There's a good question here we'll answer in a second. ACH should replace checks. So if you could read off that question, I'll answer that right away because it kind of goes back to lock boxes. Can you read that? Or
Absolutely. The question is, what are your thoughts on the use of post office boxes for receiving checks and payments? Are they more or less prone to fraud?
boy, that's a tough one. I would say less, especially for internal fraud, with the PO box and lock boxes. I look at a lockbox almost like I do a bookkeeper. There's nobody at the company that would be receiving and depositing checks. Okay, so you don't have to pay benefits. The bookkeeper, there is no bookkeeper. The bank is taking those checks in and making those deposits in. Does it reduce parts of the path of a check? The answer is yes. Does it eliminate it altogether? The answer is no. But because those checks are going to be mailed in by a lot of places, but yeah, it should reduce the amount of check fraud.
But Ray, what if it's a PO box at the local post office?
I would say the answer to that would be helpful because I guess it depends. So if you open up if a business opens up a PO box and they go and check that PO box and make those deposits, yes, that'll help, but it does not eliminate what it saves on a bin being laid out in front of the business. I can't tell you how many times I walk into a small business and there's a big bin out in front of that small business. Now,
Yeah.
what the PO box will do, it eliminates that white mail bin being at your front desk, and it eliminates the postal worker from leaving those checks to and from your business. So here's where that does not work. So if you issue 1,000 checks today, if you issue 100 checks today and you drop those in the mail to 100 different places, your checks will be at 100 different businesses, and you have no control over where those checks go. Do you understand what I mean?
Do. Yep.
So those checks could be laying out in front of some other business. And so if you issue them, say, on a Friday, and they land and they get delivered on a Monday or a Tuesday to those businesses, in those deliveries, in those bins that the postal workers might leave at a desk where there's no receptionist or nobody sitting at the desk, they're doing 10 jobs at the same time. in there are those checks, and that's a point of theft. That could be a point of theft in the mail system. So yeah, I think that takes care of half of it,
Yeah,
not all of it.
the box will limit one of the steps on the intake side of it, but it doesn't do anything on the outgoing.
Mhm.
Thank you.
And these imposters, by the way, when they impersonate the postal worker, they might dress up like a postal worker. And so they'll look like they're taking the mail and dropping off the mail, but they're just taking.
And nobody asks the postal worker for ID when they come in, drop off some mail and pick it up.
No, they don't.
So on top of the check scams, there's a lot of other fraud that we're seeing. We see all this. Everybody here receives scam and phishing emails in their inbox daily. What these scammers are looking for, and I mentioned this earlier with the new account scammers that's looking for that one bank. But what these scammers are looking for is that simple slip up.
Mhm.
A moment of judgment lapse. It happens all the time. And really, it's nobody's fault. We're human. Once hackers, though, are in, they can hack into a multitude of systems.
Mhm.
Email account compromise is extremely scary and it's very effective. They'll hack into your emails and send out emails to your accounts payable department or directly to your bank from you, the business owner. And before you're even aware, money's been wired out or money's been paid out and it is gone.
Mhm.
A majority of banks have begun to or no longer accept email, fax, or phone wires because they're all aware of these frauds. But you may want to confirm what your bank's policy is regarding wire transfers. The list on this side, it's just a blip of what can be compromised at any time in your accounts. It goes back to what we said earlier, having a sound internal policy regarding all financial transactions and consistently reinforcing that with your team goes a very long way in maintaining safety in your office or workplace and preventing fraud. The think before you click, it's such an easy precaution, but there are so many times that we don't think twice and click on the link or see that it comes from somebody that we know and we'll click on the link. Always think before you click. I love having a dedicated computer at online banking. I know that's not always feasible, but if you can and limit access to that computer, it can be a huge deterrent and a huge stopgap for fraud.
Yeah, I'll just add on to that a little bit. A lot of small businesses might have a shared computer at home and they have other people in the household using the same computer. I would, at a minimum, abstain from that because sometimes other people in the household might click on the computer on a bad link, and in there might be malware or keyloggers and things like that, and make your computer and your corporate assets very vulnerable. So I would limit any personal use on a business computer, at least as much as you can. I know that's not always feasible for smaller businesses, but if you can have a separate computer, by all means, that really helps. So I put some fun facts here for fraud. There was a AFP, the Association for Financial Professionals. It's a lot of different banks and larger corporates, but I thought these statistics were pretty telling. And I bet it's pretty representative of this group here too. Different in the year 2023, which would be 2022 surveys, checks. So 63% of respondents said their organization faced fraud activity, keeping checks as the most vulnerable payment method to fraud. Checks. So the thing that's declining a lot, so there were less checks in the system, but look at that, 63% of respondents faced fraud activity, keeping checks in the forefront. So that second one, that business email compromise, that's just getting tricked by an email. 71% of companies fall victim to payments fraud via an email in 2022. And all that is getting tricked by an email. It looks legit. The fraudsters will, they'll hide the names. So it might be Abbott is 2 B's and 2 T's. They might just put 1 B in there. And if you're not quick, it'll look like a legit email. And meanwhile, the email address is wrong. And you get tricked because somebody knows a little bit too much about Abbott. Maybe I put some stuff out on Facebook that said I'm out on vacation or whatever. I'm a little bit more paranoid than most. So I recommend to all business owners, don't tell everybody you're on vacation or you're over in Europe. I can't tell you how many times I've seen an email where customers get tricked and it says, hey, my son John broke his arm. I'm over in Europe. I can't do this. I need an emergency wire to make payment. You owe me this. There's usually a scare tactic in there, and it makes a business owner want to fulfill doing a wire transfer. That could mean getting in the car, driving to the branch, and sending a wire when you think it's legit, but it's just a scam. So pick up the phone, call the receiver of that wire. Don't just take an email for granted. Credit card fraud, that continues to increase as well. But those first two, the checks one, that scares me a little bit because that's a declining payment method. Yet 63% say they experience fraud activity.
We in the branches and in the contact center of our bank and even on the cash management side, we receive calls a lot from legitimate customers that have been scammed. And, a lot of times we feel like we are prying for information. And honestly, if you've been hacked, if you've been scammed, if you've been frauded, once you identify what was compromised, immediately contact your financial institution, talk to your banker, talk to your branch manager, follow your internal protocol on what to do, file an incident report with the FBI Crime Complaint Center. The link's in the bottom of this page as well. It's an awful, awful event having your accounts hacked or being a victim of any type of fraud. And it can be a very long, very arduous process coming back from fraud on your accounts. But if you work with your financial institution, they will help you recover. Be honest. You have to be completely forthcoming with them on exactly what's going on. You can't expect them to either, be mind readers or ask 1,000 questions to try to get to the truth. Prevention is paramount, as losses due to fraud are not covered by the FDIC. So that's why, we've said it a few times, speed is your weapon. The second you realize something, if you contact your institution, we might be able to get in there and get it stopped before anything leaves your account. With that, I want to thank everybody so much for their time. Ray and I, really appreciate the opportunity to come out and speak to everybody. And it looks like we have some time left. So any questions out there? We'd love to take some questions before we officially wrap up.
Bill, I'll jump in real quick and just carry on with that point that you were just making a minute ago about calling your banker right away. What information should a person have at their fingertips when they call you?
So, great question. Thanks, Ken. It's very important to have exactly what was frauded, whether it was a check fraud, whether it was a transfer that was sent out. Have your register with you also. The first thing we're going to have to do is put a hold on that account. And when you hear that your account's going to be frozen, as a small business owner, that strikes fear in your heart because you have outgoing checks. Most small businesses write a number of checks before you even know you've been frauded. You have automatic payments coming out of that account. You have, automatic payments being sent out of that account. So the worst thing a business owner wants to hear is we have to close this account because it's been frauded. Banks, and I know us, for example, but other institutions, colleagues I've worked with, we do everything in our power to make it as painless as possible, setting up that new account. knowing what checks are outstanding that are legitimate ahead of time. That's so important. So the wrong check doesn't get returned, and your rent check doesn't get returned, or your mortgage payment, or a check out to a vendor that has some strict policies. So have all of that information ready. Have your business documentation ready, because we will have to immediately open up a new account to get that funded and to get that started. To work in some cases with Ray's division and getting those accounts transferred to online banking if it wasn't your account, online account that was hacked. Just have all of your business documentation and your registers, what's been paid, ready to go.
Mhm.
Very good.
I would just add to that a little bit, like have as much as you can, but don't let that delay making the call. So that's, if you wait all day to try and have everything before you make the call, that's a bad move. So have what you can and as much as you can, but don't delay that call. The speed of that call is pretty key. And if you can do things by the end of the day, there's certain cutoffs between banks that we can intercept things. And the sooner we know, the quicker we can react and save from loss.
The important thing is getting that account stopped, so nothing else can be taken out.
Yeah. So here we are near the end. Last question for you and Ray both, Phil, is best practices. Remaining vigilant is great when it's just you and maybe a couple other employees, but when you take offices spread over geographies with people in them, different facilities and so forth, what are some best practices that you see small businesses implementing to make sure that everybody stays vigilant and aware of the dangers and opportunity for fraud?
Ray, you want to take that first? You want me to?
Yeah, I'll take a shot at that.
Okay. All right.
Best practices, get rid of checks.
Done.
Stole the words right out of my mouth.
Yeah. Second practice, when you go to the automated clearinghouse, ACH, like you're paying electronically, that's probably the least costly of all methods, ACH. So you want to have dual control. So you have a preparer and an approver. So business owners, I don't think it's beneath everybody to watch their money. So have the owner of the business approve what the preparer does. And yeah, that means two people, it's just segregation of duties. Those are the two things. Get rid of checks and segregation of duties.
So the only thing I'm going to add to that, a lot of small businesses don't really think about it. They don't spend a lot of time on it. Is having that internal policy and procedure regarding safety and security of their business. Whether it's having quarterly, just quarterly reminders or a quarterly meeting, a monthly meeting, just on the different types of attacks that are out there, whether it's phishing, whether it's now, whether it's scams, whether it's check security, just consistently, doesn't have to constantly, consistently be in front of your people or your departments or your locations and just make sure that they're being sound, they're being secure, they're following procedures, and they're not taking things for granted. We see so much fraud and scam just from that lapse, just taking things for granted. Oh, I've gotten 75 emails from this person. They've all been legit. Click. And again, as Ray said, there's one T missing from that last name. Or instead of from Phil Corradino at WSFS Bank, it's Phil Corradino at WFFS Bank. And, that little thing is what they look for.
I'll just add to that, two simple things in that, Phil, but you should have a checklist. And a lot of small businesses might not have formal policies, but at a bigger businesses will have, formal policies on things. And in there, you'll have a checklist of things to do if you've been hacked, things to do that are best practices. Your accountant should have best practices, like what to do, reconcile your accounts every day, look at your accounts every day, but maybe have a checklist of the people in your office, what to do every single day, put it up on, on their screen, like do this every single day, but look at your money every single day and just get rid of checks and move to electronic payments. That's
You
my
know,
advice.
a lot of businesses have emergency forms on like if there's an injury in the office or if there was a robbery in the office, they have an emergency kit. Open the kit and this is exactly what to do. There's nothing wrong with having a little emergency kit on what to do if you've been hacked, scammed, or thing.
So I'm going to jump in here and offer both Ray and Phil closing thoughts. We have it's about 12:50 right now. Let's take a minute and wrap up, and just any parting thoughts before we close.
Personally, I just appreciate the opportunity to really talk and get the message out there on what we see in our industry. You know, there's so many good things that a bank can offer you, so many great opportunities to help your business grow, help you save money, help you keep your funds safe and secure. And thank you just for the opportunity to share some of that.
Ray?
Yeah, same. Get rid of checks, go to ACH, and have segregation of duties in your office. Those are my parting words, but we really appreciate it. The FDIC is great. I'm glad the Silicon Valley Bank crisis and a lot of the bank failures from a couple months back seems to be behind us, which is a great thing. But the FDIC is great, but the FDIC will not they're an insurance company for bank failures. That's where the FDIC comes into play. The FDIC does not guarantee check fraud or cyber coverage or anything like that. So trust your advisors, your accountants, your bankers, your attorneys, and have those numbers handy.
And get rid of your checks.
And get rid of your checks.
Very well. As a small business owner myself, I've learned a lot this afternoon. So this has been very valuable. Looking at the comments, Terry, this was excellent. Thank you. Kim said, I agree. Great information. Thank you, Ray and Phil. And so from us at American Community Journals, thank you. Very informative. This will be recorded. WSFS will be sharing it, as well as we'll send it out to the attendees as well. So thank you very much, Ray and Phil. Nice job.
Thank you.
And thank you very much.
Good afternoon. Take care.
Have a great day, guys.
Bye-bye.
Bye now.